with that being said, now let's get to types of trends. But I just hope we are clear with the time frames. So every chart is modeled to suit a particular time frame. So once I click on the 4 hours, the 4 hours chart will change. It will not look the same way with the 1 day chart. All right, the 4 hours chart is modeled to suit 4 hours. That is, each of the candlesticks are formed per 4 hour, right? So if I'm on a 1 day, each candlestick is formed per day. If I'm on a 4 hour, each candlestick is formed per 4 hour. So if I'm on 1 hour, that means each of the candlesticks are formed in 1 hour, right? So good. Um, types of trends. Now we have types of trends, right? We have the buying trend, or you could call it upward trend. We have the selling trend, or you could call it downward trend, and we also have sideways. The third one, sideways. Upward trend is when a market has been when the price of a particular market has been going up. That is, if there's been a constant movement, like a constant upward movement in price. For instance, what's an example of a buying trend or an upward trend? Let's look at this point. Price started moving at this point. Let's say here. Looking at this, the price has been moving consistently upward till it got here. Then we have this. So we could call this kind of trend we call this kind of trend an upward trend or a bullish market. A bullish market is a market that has been good. As when more investors are coming into a market so well, we could say that market is bullish, or you can call it an upward trend or a buying market. Then we have a selling market. A selling market is when a price of a market drops. That is, when there are so much sellers in the market, the price will drop, and when there are so much buyers in the market, the price goes up. So this is an example of a selling market. You can see the price started here at $54.9, right? At 54.9, it has dropped to $44.26. All right, this is an example of a downward trend, or you could call it a bearish trend or a selling market. What happens in a selling market? In a selling market, so many sellers sell off their assets. Probably they don't want to hold anymore. And once they sell off, what happens to price? Price will drop. So another one is sideways trend. Sideways trend is a kind of market that oscillates. It goes up, then hits a point, comes down. It goes up, hits a point, then come down. When it goes up to a point which it cannot go up anymore, we call that point resistant points. All right, it cannot go up anymore. Then it bounces. It has a particular point it touches and comes down. Particular point touches and comes down. We call that point a resistance point. And when it comes down to a certain point where it cannot go down anymore, we call that point a support point. So a range and in a ranging market or in a sideways trend, we have support and resistance. Let me see a good example of let's change the time frame. Let me see a good example of a ranging market. Let's look at this point. All right. Let's look at this. Okay, this is not a good. Okay, so you can see the ranging market. If you could look here, price got here, hit this point, got up here, hit this point, got up here, hit this point. This is an example of a ranging market. A ranging market is neither upward nor downward, right? So this is an example of a ranging market. In the ranging market, well, one of the best markets to trade is the ranging market, really. And it gives you is a very straight way to trade. Then what it means is you get to sell it at the peak, you buy the bottom, sell at the peak, buy the bottom, sell at the peak, buy the bottom. All right. So these are the three types of trends we have in the crypto market and also in the forex market.